up, guys? Welcome back to Diamond Hands Trading Channel. Today we're going to be going into what a bull trap is. I'm going to be giving a brief presentation. First, we're just going to go into what the definition of it is, what it actually means. Next, we'll cover some examples. And then at the end of this video, I'm going to tell you how to spot this trend happening beforehand so you don't have to make the same mistake. So first off, what is a bull trap? The technical definition for it is it's a term used to describe a false signal indicating a rise in market trend when in fact the trend is about to reverse and head downward. This often happens usually when there's a sudden increase in price causing bulls to buy in the belief that the trend will continue up. This usually can happen to rumors, news, manipulation from bears just trying to stop hunt, liquidity hunts. And yeah, next, the best thing to do is just show you an example of what that means. So as you see, we have this little trend here. This is for the euro, right? So these were our highs. We had printed around $1.25. It had been resistance for quite a while. Boom and boom here again. Then on this run up, we had a nice strong run up. Everyone's getting really bullish. They're trying to hop in. You finally see that close above the resistance level. And, that just gives them bulls confirmation that their bias is correct. So then they probably just crank on the leverage even more when in fact it was just a liquidity hunt and bears send it down immediately, having all these longs trapped. And they would, hopefully close after this low with a stop loss, or sometimes some people stick to their position. They're a little stubborn. They would hold it the whole way down and it never really goes back up. So next I'm going to go over, today's really funny. Today is February 7th. We just witnessed a bull trap for Bitcoin, or actually the S&P, and pretty much everything today, because Jay Powell spoke today around 12:40 p.m., roughly about an hour and a half ago. So I'm just going to hop over to TradingView and I'm going to show you a live example of a bull trap. So today is February 7th, 2023, and we actually just witnessed a live bull trap. So I'm just going to go into that. So we're currently looking at the 15-minute for the S&P. So for those who don't know, if you're following with my videos, the indicators that I use are Comet Coloring by Spaceman Bitcoin and the Asteroid Belt by Spaceman Bitcoin. So that's basically just this here. It changes the color of the candles according to momentum, and then gives me like reversion areas. If price is going to go up, it like fires off a buy signal with a green X, fires off a sell signal with a red X. So here we got a nice buy. Price had continuously held 40.95, just kept bouncing into it. Then this particular move was news-based. It was Jeremy Powell was speaking at 12:40 p.m. today, and as soon as he did, we had the candle down and just rocketed up. So it went from 4,100 all the way up to 4,160. Now, as you can see, it just wicked into this area twice. And why do I have that line there? Well, simply all I did was go off of high time frame. And you can just see that this was a very important resistance level in the beginning of the month. So, boom, broke above, closed back below. We had a 4-hour swing failure pattern there. Boom, boom, boom. Just kept rejecting. So I know that level is important. And if you were long, that is where you would take, at the very least, partial profits. But yeah, so this is the 30-minute. Price suddenly increased drastically right up to resistance. Everyone thinks it's going to continue. They're buying, having this quick surge. They're having fear of missing out. They want to make sure they catch it. And then just the next 30-minute completely retraces the entire move. And then what's even worse is afterwards, most people would have had their stop losses like right here. That's what I would have done, because that was like the low that was continuously held before the move up. And bears just kind of like sent it below there real quick to liquidate you. You know what I mean? That's honestly where any normal person will keep their stop loss, and they would have just gone out, and now it's making its way back up, which is interesting. Usually the trend would continue lower. We could still make a lower high here, you know, and then continue back down even below this. But really, I'm just paying attention. This is only the 5 minutes, so I don't have much to go off of. But the S&P reacted this way, and as did all of crypto. So Bitcoin looks very similar. You know, this level here, 22,860, was continuously held. Boom, boom. Had the nice run up. I believe it's what, like 2% almost. Yeah, like a nice 2% pump. And then completely retraces the entire thing, taking out the stop losses. And now let's make another run back up. I personally had longed Ethereum at what resistance level do I have here? That's interesting. So yeah, price goes above this level or your resistance level briefly, right? Where am I doing? Let's see. We can take this. I really had it off this high here. You can put it off that one too. But this one makes more sense because you see we're just rejecting it again on this hourly, which is not a good look. But, you know, very bullish close above previous said resistance, right? We even like went for these highs here, like, you know, took out the stop losses there. So yeah, this wicks into your resistance, very bullish close, and then it's a very sudden fall back down, and it actually ends up going below that previous hourly, taking out all the stop losses for those who are long. So usually price action like this, it's very hard to win either way. You know what I mean? So the best thing to do is just steer clear when things are very volatile like this, because you're most likely going to get trapped. So bulls were trapped. You know, at the first thing, bears were trapped. They got taken out because probably went above their stop losses, right? Because it was above these highs here at 1660, etc. And then just sells all the way off, going lower and taking out the bulls as well. Now we're making another run up this 1655 area. I was long Ethereum at like 1645, like right here. I did jump in. I did not take profit. I closed maybe like 25% of it. Ended up coming all the way back down, and now I am in profit again. So I'm most likely going to pause this video and close that. But, you know, just trying to show you what an actual bull trap looks like instead of just looking at, you know, an example. This is a live example. It's literally happening at this moment. All right, so next I'm going to move into how you can avoid being in this situation yourself. To go into how can you as a trader spot the bull trap beforehand. The best way to do this is to find some trusty indicators. As I just showed you in my chart, I rely on the asteroid belt and comet coloring. That one is a premium indicator. Another one that would be great is RSI. It's free with like the Bollinger Bands. Very simple ones that every new trader should research. Those would probably be the number 2 that I would look at. Relative Strength Index, which is RSI, Bollinger Bands, and start learning to look at volume. Which brings me to my next point. So, in a bull trap, when, you know, the buying pressure is basically being fabricated because it's guys who want to, you know, first take out the guys who are short, trigger their stop losses, and then they want to fill their own and send it all the way back down. So, you know, it's not genuine buying volume, and that takes some time to learn. You can have the volume indicator set on your trading view charts, just have it at the very bottom. I think it comes with it in the default anyway. But yeah, you will learn over time. It just takes practice, learning what typical volume would be on any given day, just even when we're like ranging and not, you know, it's not volatile, and then what volume should look like if there was genuine buying pressure and, you know, bullish to send it up into those highs. So that would be lack of volume. Number 3 would be overbought conditions, and I'm going to cover the resistance levels in the same point because it's like the same example. So as I showed you before, With Ethereum, I had a high time frame resistance level going off these highs last Sunday. We wicked up to it, had that bearish close, and that's kind of what triggered the move below. We are looking at on the 5-minute. You could look at the 15 as well, but in moments like this, even the 1-minute is relevant because price was so volatile. Even now you can kind of see it. But either way, the 5-minute, you can see that I had this resistance level, right? It was a high time frame resistance level at 1673.50, around there, 1674. And price had wicked into it and above it 4 times. 1, 2, 3, 4 in a 20-minute period, and always closed below it. So as I went into earlier, having a momentum indicator can warn you of these signals beforehand. Me being a price action trader, I know that this is kind of a bearish scenario. If we can't get over this level, but we keep trying to, that shows that the momentum is fading. The asteroids belt did fire off a sell signal on the 5-minute there. Let's check if it did on the 15. No. So that's why it's important to check all time frames. But yeah, you see prices kept going up, rejected, fired off a sell signal. I know to go short there. So basically all it did was most bears who had been short maybe anywhere here or in this level. I know a lot of guys who were short from the 1655 level. That would have just instantly, this move up made them like freak out. They probably had their stop losses above that high. Even if you went like short here anywhere, like 1640, you probably had your stop loss there. So it triggered it, sent it higher. Fake buying pressure. They're just almost pretty much like a swing failure pattern. They're just liquidating or getting the early bears to close their positions. Then they send it down. And then they take bulls out as well, because maybe bulls had their stop losses here, and it just briefly wicks below it, makes them trigger, and now we're back up. We're pretty much in the mid-range of this entire move, 1655. So, next we'll go back to the slides, and the last thing I can really tell you is overall market conditions. So in this case, the entire market, traditional finance and crypto, because they're both correlated nowadays, experienced this bull trap earlier. We saw it with the S&P when I showed you in the beginning. This was all pretty much news-based. Like I said, Jeremy Powell, head of the Fed, was speaking at 12:40 p.m. Eastern Time, and all this occurred in that exact moment. So yeah, this was completely news-based. The overall market conditions, everyone thinks we're still in a bear. We are in a bear market, just a bear market rally until proven otherwise. But yeah, it's just important to remember that, right? So we don't want to be getting super bullish just because we're going up to a resistance level, right? When we know that resistance level was just rejected only a few days ago, right? So if we had flipped it and we had seen some closes above the level and then instead of always closing below, like kept closing above, maybe wicked below, always closed above, right? That would have been a different story. That wouldn't have been a bull trap, right? Because usually it's very, very sudden. It just straight up and straight down. And that's how they get you. It happens so fast you can't really even notice it happening. So that's pretty much the end of the video. Hopefully I covered it so you can understand. That's my goal. If you liked the video, I appreciate if you like and subscribe. Really helps me out with the algorithm. And yeah, I'll see you guys next time. We're going to be doing the daily update later on today, and I'll see you.